Hi, everybody. Welcome to Stop Being Sold, a community of informed consumers who are sick and tired of being sold financial products they don't understand or need. So if you're tired of being a transaction, hit that subscribe button and the notification bell so you never miss another video from us. How are you today, Brian?
Hey, doing great, Michelle. How you doing?
I'm doing good. So in this video, we're going to be talking about inflation and your stock portfolio.
Good.
Specifically, we're going to look at, historically what sectors have performed well during heightened inflation years. But before we get there, let's talk just a little bit about inflation and what's going on. I mean, this is a big topic. Everybody's concerned. People are feeling it, like really starting to feel it, really, really, really feeling it. And then with supply chain shortages on top of it, it's just a perfect storm.
Yeah, and going into the holiday season, I mean, look at this rising inflation, highest CPI numbers in 30 years this past week.
What was it? What is it? What did it come in?
6.2, yeah.
Yeah.
And, everyone's worried about their retirement portfolio, but at the same time, they're worried about, having money to gas prices or going through the roof. I mean, I see it because I have a truck. And when I go to the gas pump, I mean, it's $100 to fill up my truck now. So a year ago, it was $60. So that's a massive increase, especially if you have to fill up your vehicle several times a week. So it just depends on how far you drive to work. So
Absolutely.
So inflation's definitely here.
It is. It's not going away anytime soon. So let's back it up. Let's talk. What is inflation? Define it.
Okay, according to Investopedia, inflation is a decrease in the purchasing power of money reflected in a general increase in the prices of goods and services in the economy.
There you go.
Basically, in a nutshell, your gas prices are costing you a lot more, and you can't get as much gas as you used to be able to get a week ago, a month ago, a year ago. So,
milk, butter, bread, meat,
turkeys. Thanksgiving's coming up, and turkeys are in shortage and costing a ton. Price is
right. So let's talk about historically what sectors have performed well during heightened years of inflation.
Sure. Let's start off with real estate. Real estate has been known to be two reasons for real estate. Prices are still increasing the value of the home or the asset over time. That's common. But rising rents can also increase the income to the landlords over time. So real estate, you're starting to see on the stock market, real estate trust and real estate property, stocks that track real estate, all of them are starting to trend up as the inflation's kicking higher.
Great. What about commodities?
This is a good one. As inflation climbs, investors tend to look more towards tangible assets. And the most common one over the decades has always been gold. And gold is definitely trending up. But also take a look at oil. Oil prices are definitely going up, and people are investing in oil. If you look back to, I would say 2 years ago, back in when was it, 2018, 2019, we were at historical lows in oil prices.
Yeah.
And all of a sudden, here we are. I mean, think if we're like $80 on the barrel. And also, so take a look at the recent increase at the prices of the pump. Not only that, some of the warnings that we got recently of the cost of heating your homes in this coming winter. Then prices are going up. So that is a commodity also. And everyone's feeling it.
So what about commodities like copper, lithium, things like that will go into these electric vehicle? Anything having to do with EV as that becomes, what do you think?
Not as much.
Better hedge?
Not as much as like the big ones, gold and oil. But gold has always been the safe haven for inflationary times. But that is soon changing because we got another one stepping into the arena now that's like, could this one be a better hedge against inflation than gold? And that's cryptocurrencies.
Sure. Yeah. So and you've seen that increase.
Dramatically. And if you look at the rise in inflation on a chart, and match it up to gold and match it up to cryptocurrencies have outperformed. And so you're seeing, we're starting to see a lot of analysts come out and say that may be the new hedge. A lot of articles, analysts come out speaking about that. So,
okay. So what about bonds?
Bonds. Honestly, what's really happening in that space, look, as rates move up, bonds has always trended to go down, right? Okay.
Right.
But in inflationary, TIPS, which are Treasury inflation protected securities, are the ones that are trending higher. So think about this. When the consumer price index, the CPI, rises, which we just had that massive report this past week, so does the value of TIPS investments. So we're starting to hear that word a lot on CNBC and Bloomberg. TIPS. Yeah. Not only does the base value increase, but since the interest paid is based on the base value, the amount of the interest payments rise with the base value increase. So it's kind of like you win twice with that. So as an example. So.
Got it. Okay. And then stocks.
Okay. So there are stocks that have performed well over history with higher inflation, but there's also stocks that have underperformed. So let's look at the ones that performed well. Consumer staples. So as long as they can pass on any increases in prices to the end user or you, the consumer. So, and then value stocks. These are typically mature businesses with steady growth rates, steady revenue, and earnings. And many of these may pay dividends also.
Okay. Do you have any examples?
Yeah. Some examples of value stocks. And before I give these to you, this is not an investment advice telling you to run out and buy, because Brian said that these are good examples. Example means example. So I'm not your investment advisor. So full disclosure. But examples of value stocks, UPS, Merck, Verizon, Prudential, Kroger's, grocery. So what you've got there is transportation, drugs, insurance, safe haven, and grocers. So there's a nice mix of value stocks for you.
Okay, so you talked about stocks that have in the past, and past performance does not indicate anything happening in the future performance, right? So we talked about stocks that have performed better during higher inflation periods. What about stocks that performed like worse? Underperformed is the word. Historically have underperformed.
Okay, so take high dividend paying stocks. These are the ones that consumers buy because of the high dividends that are being paid out. They kind of act like a fixed rate bond, and as prices move up, interest rates move up, inflation gets higher, they also drop. So be careful on some of them. And then secondly, growth stocks. Okay, these, remember, with growth stocks, we're anticipating future earnings, and we'll give them a multiple on their earnings because they're going to grow a lot faster, right? They increase their revenue and their earnings at a faster rate than the market. But the problem is, if we don't know what the future is going to be, and interest rates are moving up and inflation's moving up, growth stocks will tend to pull back here. So, and they're also tend to be more sensitive to the interest rate changes, which, according to the Fed, we could be moving into a higher interest rate environment starting in the middle of next summer is what they're estimating, unless they have to move it up sooner. So.
Right. And some of those growth stocks, and again, these are examples, would be like your Microsoft, your Google,
Tesla.
Netflix. Yeah,
Google,
Netflix.
Amazon, all the big ones. So like the banks. So.
All right. Perfect. Anything else?
That's about it.
We covered everything, right? So real estate, commodities, crypto, stocks, bonds.
Yeah. You got it. That's a nice baseline for how your portfolio and inflation work together or not work together. So
I think this is we don't know the future. And we've just said that like 19 times. Nobody can predict the future. But you
Right.
can look back historically to see what may or may not work this time. This is we're in a whole new era too, right? So
Yeah.
I think this really speaks to, if you have money invested, do not just let it sit there and just put it on autopilot. You have to be engaged in your money and really pay attention, because it is your money and no one's going to come save you.
Economy.
Yeah, no one's going to save you. This is your responsibility.
Yeah.
All right. Well, if you like the content of this video, go ahead and hit that like button, and also make sure you're subscribed so you don't miss another video for us. And thank you everybody for watching. And again, get out there, get engaged in what you're invested in, pay attention, do some research.
This is your money.
Exactly. Thank you so much, Brian, and thanks everybody.